The Ambuja Cement's numbers. Remember, we're expecting a bit of a degrowth, a flattish number in terms of the volumes. Though we should see some kind of compression. I think the number should come up for you on the screen. The net profit has come in at around 400 crores. So that I think appears quite good as we speak. So let's get that number up for you. And even on the top line, I think we should get those numbers up for you. I've just got these numbers. It's at around 2,560 crores. So that should come up for you. The bottom line, in fact, is looking very, very good as we speak. I think the profit number as well, the EBITDA operating profit should come up for you. That has come in at roughly around, I think it's a very pleasant surprise. Let's pull that number up. We have the total income. That's come in a tad bit below than what the share is estimating. The profit number is looking very, very good. And EBIT has come in at around 450 crores. Put the depreciation together, that's coming at nearly around 600 crores. So let's pull up that operating profit. Prime facie, these numbers are looking very, very good operationally. But we'll require the volumes. Yep. And there has been a bit of a degrowth, so I think we should get that number as well up for you. It's coming at around 5.8 million tons approximately. There's a degrowth on the volumes parameter, so let's get that up for you. 5.76 million tons. That compares with around 5.88 million tons. So that, in fact, is where we are seeing a bit of a degrowth. Improved overall sales volumes increased by close to around 2% is what they're saying on account of improvement. Okay. That's in terms of the volumes. Energy cost was significantly lower by around 27%. That's what's really brought on the beat by around 27% on low fuel prices, as well as increased usage of petcoke. Now they use close to around 60% of the usage comes in. That's the fuel mix. It's at around 60%, which compares at around 45%. These numbers look good actually on the operating profit. Like we saw in ACC as well, top line is a bit of a miss because volumes are a tad bit lower. But otherwise, these numbers are looking quite good. We have Prakash with us, Prakash Diwan. Hi, Prakash. Good evening. Thanks so much for joining in. Same story again. Volumes a bit of a disappointment. Margins looking better. EBITDA per ton as well should come in much better.
Absolutely, Nigel. I think this seems to be a very clear pattern that's emerging, especially for the larger players. We didn't expect too much of volume growth in any case, but the numbers on the profit level would definitely be quite encouraging in this quarter. And as I said, what's important is to read between the lines and understand what's expected in the subsequent quarters, because that's where a buying or hold decision would actually be more effective. And from that perspective, I think the input side, the softness in the petcoke and the fuel cost has definitely helped most of the players. And next, the round of growth or re-rating could probably be, from the volume and realizations both going up. Volume might take time. Mind you, this is a lull of this quarter is a little bit of a dull, phase in the cycle. So April is fine. April, May, June is okay, but July, August, September are not the best of months for the cement companies. My expectation is the realization will improve as we go along, as volumes also pick up and capacity utilization will do the rest of the job to make efficiencies at par. So you should see these numbers definitely in that light, and they're definitely very positive.
All right, Prakash, just hold on to that thought. I want to come back and quiz you about how the recovery will be, because we have the rainy season that will be coming up. And there, I wonder whether we're going to get any volume growth whatsoever. The numbers look quite good. We have Umesh Mehta as well, who joins us. Hi, Umesh. Thanks so much for joining in at this point of time. It appears that, in fact, these numbers are looking good operationally. Yet again, volumes have disappointed, but otherwise, numbers looking good?
Oh, yeah. The numbers are really looking good in terms of the cost savings that the company has done. So I think that's encouraging, and so that was not expected. Although volume there is a slight disappointment on the volume front.
Right.
But going forward, as it is said that market price is discounting its future.
Yeah.
So going forward, I think the triggers will be volume expansions, and so that typically will straight add to the bottom lines, because they don't require now for the capex, and the capacities are underutilized. So I think that is the biggest trigger for not only this stock but the entire cement pack, and that is how market has started re-rating these stocks. And in spite of market today correcting, some of the cement stocks were in the positive.
Well, Umesh, I'm just trying to get the EBITDA number out for you. What were you working with? Because I think the kind of surprise that we're seeing, the operating profit has come in at around 600 crores, which is looking fantastic. And if I just extrapolate the EBITDA per ton, it's appearing that it's come closer towards 1,000 rupees per ton. What kind of numbers were you working with?
So we were expecting around 810. So I think these are really fantastic numbers. The way they have done their cost savings and driving in efficiencies. So going forward, that also gives us confidence that in future also some of the commodities may not be that. So those benefits may not be available. But if this is the level at which companies are operating, I think going forward when volumes start expanding, so these stocks, they are really going to make tons of money for shareholders.
All right, I think we should just get that number up. EBITDA per ton, I've just calculated it. It's 1,007. So let's pull up the trend graphic as well. 1,007 rupees is what the EBITDA per ton is. It's roughly around 1,000 rupees. We should just get that up for you. 1,007 is what the EBITDA per ton has come in at. We have Mangesh as well, who joins us from Nirmal Bang. Hi, Mangesh. Thanks so much for joining in. You have been fairly positive on the cement space. It appears that your call is going right. Numbers still looking even more impressive than you were estimating.
Yes, yes. No, not so for ECC, but Ambuja has given a very good set of numbers. Cost has come down substantially, and on a YY basis, their power and fuel costs are down 18%, and even freight is down 5 to 6%. Similarly, since Ambuja had a higher exposure to north, the pricing increase has been much higher than what we were anticipating. So my number was closer to the consensus at around 500 crores of EBITDA, but they have delivered 600 crores, which is a very, very positive news. And I think, but the last fortnight, the kind of move we have seen in the stock probably reflects most of it. But anyway, this is a positive surprise. My EBITDA per ton comes to around 1043. And which is basically a 6% YOY decline in cost and positive realization. So it's a combination of both these factors.
Mangesh, let me grill you on that one. Then you're saying that the recent up move has factored in most of these numbers. Will you be reworking these numbers? The stock's not cheap, mind you, at around $180, $185 per ton on an EV basis. EV on EBITDA is, I think it's around 16 times its forward earnings. What's your take? I mean, will you rework your numbers from here?
See, definitely the numbers would have a slight upside, not a major one, because we generally what we were expecting is that the not second quarter, but at least one or two of the other quarters would have a very high bump up in earnings, which has happened earlier than what we were expecting. Was 16 numbers would look good, but obviously that doesn't get translated into 17 and 18 numbers being higher. However, with the stocks at current levels, I think cement as a pack, if you look at over the next 2 years, we are going to see demand-supply imbalance getting shrunk substantially. So pricing power would be much better than what we are seeing right now. So I think this EBITDA per ton still has further legs to go up, and that's the EBITDA growth that the investors are paying price to. So the multiples are not in our hands, but at least if the earning growth is visible and sustainable and the volatility is less, obviously investors will give a higher multiple than what they were giving.
All right. Mangesh, I'm just going to give you some breathing space. I think as per my sheet, at least, it's showing that this is the best EBITDA per ton number, at least in the last 8 quarters. You can come back to us. So we'll just come back to you in a minute or so. Let us know whether or not, this is the best EBITDA reading since when. But let's pull in Umesh for the time. Umesh, you have had a closer look at the numbers as we speak. Will you be tweaking your earnings estimates? What's your current outlook on the stock?
Going forward, the benefit of cyclicality has really started emerging, and this kind of stocks, once they start their cycle up in terms of their earnings growth and margin expansion, and obviously volumes will follow. So these are the kind of stocks, when they can go beyond the reasonable valuation parameters, and that's how cyclicalities play in these stocks. So I think going forward, 1 year down the line, when housing demand will also kick in, housing has a lagging effect, in economic development. So housing will also kick in, and government infrastructure spending has already started kicking in, road development. So all these things are very positive, and there is no capacity net addition, right? Their consolidation is happening.
Yes.
So I think as an industry, I think this is a very powerful combination for an aggressive asset allocation at current juncture for next 2 years horizon.
All right, Umesh, final question to you then. ACC or Ambuja, which one would you play it if you want to play it via the Wholesome Group?
Actually, both. See, cement sector has to be done in a basket format. So one needs to have 3 or 4 stocks in a basket, and
but you
obviously
can't go with ACC and Ambuja. Would you want to go for an Ultratech cement? You believe that both of them? ACC.
So ACC, because ACC there is a lot of potential for margin improvements.
All right. Thanks so much, Umesh, for joining. And let's get in Prakash into the conversation. Prakash, thanks so much for standing by, Prakash. What's your take? ACC or Ambuja? We know that, Ambuja, a lot of their cash is going to go out of their books. Though it's a more profitable company among the two. What will be your outlook if tomorrow morning traders want to come in, their investors want to come? And will you look to buy it at around 270 rupees? Or do you think much of that positive news has already been factored in?
See, I think, Nigel, what's going to pan out is Ultratech as a leader is certainly, standing taller than all the rest of the companies because of the sheer capacity, incremental capacity that it acquires from the JP Group. Now, that's going to be another 9 to 12 months away from really impacting its P&L. So my sense is till that happens, Ambuja has a very good rightful trajectory to expand its business in terms of volume growth as well as pricing and make sure that it turns out to be a more profitable business, although a bit smaller than, of course, Ultratech. But it, to me, it offers probably the best value in the medium term. And the management commentary also is corroborating with the same thought process that the medium to long term is positive. All of us are into it. The kind of incremental flows you will see in Ambuja are far more superior to what you would see probably in even ACC and Ultratech. So my choice would be Ambuja. And I don't think the stock is fully priced in the superiority of the matrix that Ambuja now offers after these second quarter numbers. So, and they follow a calendar year format. So in any case, their next 2 quarters probably would also be equally attractive enough, especially the last quarter for this calendar year. So Ambuja is probably definitely something that I would go for as compared to ACC at this point.
All right. Thanks so much, Prakash, for joining in and giving us your take. So that's Prakash. He's upfront telling us that he would prefer Ambuja Cements in comparison to ACC and Ambuja. And maybe, given that Ultratech Cement as well as Ranap, he prefers that one as a major cement company among the three. Mangesh, if you're still with us. Mangesh, just want to ask you, this is the best EBITDA per ton performance since how many quarters? Do you have that number with you?
Yeah, I think in third quarter CY12, so in the last 16 quarter, this is the best EBITDA per ton.
Okay.
So 4 years is possibly the one wherein they have reported very good numbers.
So this is the best EBITDA per ton in the last 16 quarters.
Last 16 quarters, and I think third quarter would be much better because of pricing, which has been much better from second quarter in 3Q.
All right.
So,
yeah. All right, Mangesh, and final question. ACC, Ambuja, Ultratech, what's your picking order? You've got it right because I remember you had upgraded your earnings in the middle as well on various cement companies. But ACC, Ambuja, Ultratech, the three big boys, would you have all three of them in your buy list? And in terms of a pecking order, what would you go with?
So Ultratech would be the first. Then second one would be ACC. For ACC and Ambuja, I think, what is going to happen is what ACC, our wholesale had mentioned earlier in their presentation, that the second stage of evolution would be they would merge both the companies together. So if that is going to happen, then I think I would prefer ACC over Ambuja because of the valuation difference. And again, based on even if you go by the corporate restructuring wherein they had given 6.6 as the share swap ratio, Ambuja still has 3-4% left in. ACC still has 3-4% left in terms of catching up with that price ratio. So I would go with ACC compared to Ambuja. All
right, Mangesh, thanks so much for joining in. So that's Mangesh as well telling us that it's the best EBITDA per ton reading we've seen in the last 16 quarters. He expects the next quarter to even be better. So Arundhati, just before I hand it back to you, the numbers look good. Small miss on the top line. EBITDA performance is splendid. Profitability as well. Beat street estimates. Things looking quite good for the cement companies. Let's hope the momentum continues.